I'm Keith McCullough, and welcome to the first real conversation of the year. Of course, I'd have it with one of my good buddies in the business, one of the great alpha generators, and the guy's pretty damn entertaining too, Mike Taylor. Welcome back.
Yeah, I do windows and I mow lawns.
So you took the pink jacket off, no red jacket today. You know? Is there any signal in that?
I had a coordinator help this morning. My wife helped me get dressed, and she is my consultant on fashion.
Oh.
Well,
That's very nice.
I'm not that fancy though.
Well, we have some. Today's we're gonna go through some big predictions, which we don't always do, but Mike tends to nail some big things that people aren't paying attention to. So we're gonna go through that. I also brought Mike the crystal ball.
Ooh, let me touch. Ah, troglodytes are united. Troglodytes unite.
A subscriber gave this to me. See how it rolls and everything? It's beautiful.
I love that.
It's just a beautiful thing.
Well, you're going to need it this year.
Yeah, I know. Why don't we just get into it? You said to me right before this started, you said, notice the DOGE is very quiet.
The DOGE. Radio silent, in fact.
Why? We're like 6 days away, so maybe they're getting...
Well, that means they're actually doing something, putting pen to paper. So I would expect to see a number of balloons come out immediately on what gets cut. And this is, you have, first of all, Hedgeye macro insight and forecasting is nothing short of sensational. And you may not realize this, but all the hedge funds watch your stuff, subscribe to your stuff, live by this stuff. And that is totally different than 5 years ago.
Well, thank you.
They're who? Hedge who?
Well, you called that too, so thank you for that.
And everyone, so first of all, they think that, because we talk on the phone, and they're like, what's Keith, they want to front run you. So they're like, what's Keith thinking that he's going to do so I can front run the thing? And I'm like, no, that's not how it works.
No.
It's a process. And they're like, no, it's not a process. What? I'm like, yes, it is it's a machine where you have inputs, and it's been refined over 15 years, and all of a sudden, for the past decade, it's more right than wrong, and then a lot more right than wrong, and now extremely right more than wrong. So kudos to you for the refinement process.
Thank you. Has it helped you? I mean, we'll get back to the DOGE point, but I appreciate that. You were one of the first subscribers, but first, we had subscribers that subscribed but didn't completely believe in what I did, because that's not how they did it. And so it's been a very humbling experience, because you meet with all types of investors, right? But maybe talk quickly about how you use the process to generate the kind of alpha you did. Your pink, for those of you that don't know, is Mike's healthcare ETF on a 1 year, on a 3 year, and I think since inception, because that's like 3 years.
Just over 3.
It's the number one performing active ETF. I don't know if you have much competition on that front, but any ETF, healthcare ETF.
Yeah.
So can you talk a little bit about how you might use our process, our team, et cetera, in terms of your process?
Absolutely. I think an awful lot about picking out alpha in our groups. And these are idiosyncratic names that have much better growth prospects that others don't recognize yet. Classic hedge fund approach. And this is what I did before. Yep. Pick longs, pick shorts within healthcare. I'm a healthcare guy, did drug development, scientist. So I am fit for healthcare. This is what I do. And so I use your process to figure out where's the money going. And truly, when I get and I get calls every day talking to clients on Pink, and they say, well, what's going to happen in healthcare? And I tell them, well, watch NVIDIA, because that's literally the answer. If NVIDIA is going to not make the whisper, which it didn't, not make the whisper guidance, which it didn't, and start putting in what's probably a topping right now, in my view, and this is different than the Hedgeye view a little bit moving forward, and we'll talk about those reasons. But I say, then the money is going to go into healthcare, especially when they find out that RFK, which is a threat, a perceived threat, turns into a heck of a lot more bark than bite, especially in the management of healthcare. Now, so far as food additives and so forth, he will have an impact there. Probably a meaningful impact, but so far as actual healthcare, very modest.
It's been interesting because you have just that sector rotation's already started this year, and from an asymmetric point, right? Like everything rate sensitive, lower beta got smoked as soon as we went in, came out of quad 4 in the third quarter of 2024, and then we got quad 2, all the fun stuff started again, healthcare started to underperform. But then you got into this rate sensitive basket, down utilities, down healthcare, down REITs, all that basically straight down. That's my short book, which is why it's an interesting time to have this conversation, because at some point I don't want to get my face ripped off on my short book. But NVIDIA broke trend. Apple broke trend. Microsoft broke trend.
Yes.
I look at one of your predictions and it says, I mean, not many people say this, tech is going to have a gigantic correction. So part of what you're saying is a flow trade?
Yes.
Okay.
And that's what I use a lot of Hedgeye for, is that flow trade, that change. And it happens with your quads, but also idiosyncratically. So I'm watching Apple, and Apple's a mystery to most, not the guys who are long it, because they don't even know why they're long it. It goes up because the sun rises. And the reality is it is a very staid company with a wonderful buyback and very, very, very little growth with a lot of risks, and trades at 30 times forward, or around that number. And it's an ungodly number. I mean, you give an example. Warren Buffett sold most of his holdings and is now sitting in a third cash. That sign in the back of my head that, maybe he's seeing the probability of what I'm seeing in the market coming forward, which doesn't show up in your quads in that analysis. But what I'm thinking about and what I'm saying is the risk is really outside of your research, where it's economic data that gets put in. This is not economic data. This is going to be government spending. And that has been a major driver of the results of that economic data. So, and in previous times it was the Fed changing the cost of capital. And now we've engaged in 15 years, but more so over the past decade, the biggest modern monetary experiment of all time, of grandiose spending that has changed the footprint of business, which is new. That has changed the footprint. Usually government spending would be ephemeral. It would be 1, 2, 3 years during a downturn to fill in the blank and smooth over the economy. But no, this was a strong economy with massive government spending and escalation on top of that, all debt driven. And that changed what the companies did, because beforehand you wouldn't see them expand their capacity to take this ephemeral period. They'd say, okay, it's going to sputter out because this is just all stimulus. But no, now it's 7, 8, 10 years of this demand. So we have to change our capacity in order to meet that demand. So that's why if this does unwind with DOGE, it will be double felt. It'll be felt on revenue, it'll be felt in margins, because they've expanded capacity.
Yeah, we were going through that actually yesterday. Steiner and I were reviewing our GDP nowcasts, and the big focus was the big G and the comps, because we use base effects, and they're the biggest ever. So what could possibly go wrong if you actually start to cut government spending? Yeah. But I think what you're also saying, and we're seeing in the signal potentially here, because Walmart just broke immediate term trade, which is new. That's another one that you want to talk about, I'm sure. But Apple, et cetera. Microsoft even broke trend.
Thank you, brother. I did not know that Walmart broke trend. Thank you.
Trade, not
trade, not trend.
There's immediate term trades and intermediate term trends, but one leads the other. One front runs the other. That's why I built it that way. But it's endemic to, like, we use the same process at the company level, right? I mean, you use base effects, right? So extremely tough base effects for Walmart. You got NVIDIA has the toughest base effects in the history of base effects. So these things are things that, their revenue growth happened, and now it's endemic to those specific companies that they have those, specific base effects that they have to compare against. So the cycle could do anything, and those companies could do their own thing. You're just saying that they were a huge recipient of the big G thing, therefore that's going to be unmasked.
There'll be an unwind. Yeah. And so we could go into it now, so we could articulate the Walmart story, because it's really, I went through my thoughts on what might happen on my list of predictions I put out on Twitter, or X, and I thought about what would be most affected by this, aside from the idiosyncratic names that I know of that'll meet or miss or whatever. And I thought the big surprise would be the Walmart pooches it.
Yeah, you have Walmart misses estimates. Mike Taylor's predictions are very explicit. They don't like rant like some sell side note because he's not a sell side. But yeah, that's exactly what you said.
And that would be very, very painful because of the positioning. This is trading at 30-something times forward for a retail company. And it is a great company, and that's true. They have taken an enormous amount of share, and they have a tremendous footprint. But they have also been a tremendous recipient of 15 million illegals that have rolled into the country, many of them getting checks. And where do they all shop at? Walmart. So they found a whole lot of new clients. In addition, you have a lot of Biden programs that have occurred over the past 4 years to juice the election for him. The SNAP program, for instance, which has just gone on and on and on, going to end. I believe this will be part of the Trump sort of announcements that come out at the end of this month. Mm-hmm. So SNAP program, Medicaid cuts, in my view, which will be material for blue cities. Mm-hmm. That will be a piece of it too. And of course, deportation of at least 1 million illegals this year.
What do you think the pace of that? Do you have a view on that?
I do, actually, because the whisper is to the folks that do this is we need 300,000 beds. So you put them in detainment. It's not pretty. But you round up, you try to find the bad ones, but they may just find them all. They seem to have a real fire under their butt to get this going.
And they want to go. Is it
300,000?
Is it going to be the bad guys first?
Honestly, I don't think so. In the beginning, I thought that's what it would be, but I don't think so.
Okay.
So if you have 300,000 beds and you flip them 4 times a year, it's over 1 million people. That's it. So, and there seems to be a material mandate here. And we have to think about the things that Trump truly believes in. And he believes in fair trade, he believes in America, he believes in low interest rates, and he believes that immigrants that are here, and we love migrants in America.
Thank you.
We, 300 years ago.
Elon and I, thank you.
My family was one of them too. We all are, and we love that. But the illegals are flat out dangerous.
Yeah, I'm trying to find. We can show our immigration data, but it's really, and it's been so wildly understated, is the point that we make in our slide deck. But therefore, the impact. Any reversal, and then people start to talk about the pace. These are things that you can't really. I mean, the government's going to try to say, like today, they floated this idea on tariffs. Oh, we're going to do 2 to 5% a month. Mm-hmm. Like rate cuts or central market planning, like that can be achieved, like with some mathematical certainty outcome to tame inflation, I think they were saying. So it's like, because a lot of people are nervous about the tariffs. So they're trying to come up with some plan. But just like cutting, stimulating, tariffing is a central it's a central planning job.
Well, the pen is going to paper right now because silence on my end, and it has not been silent.
Where you didn't, like prior, you had a lot of feedback.
I had feedback.
Yeah, for those of you that didn't know, Mike knows Vivek from way back when he was an analyst on Wall Street.
We were young.
Yeah,
I had hair.
But you were the first one to tell me, like, look, these are practitioners. They're asking for who the right people to speak to are, or who the right people, to engage with might be. Now you're saying that's just silence.
Yes. Well, they got those people down now. All the people are assigned, and they did a very good job in getting that together pretty quick. Unlike last time, where Trump, I think, pretty much said, I won. and that continued till the 4th year. So,
people underestimate that, right? Like it wasn't random that the mooch made it onto his initial 80.
Like we talked about, as a butt dial, right?
Yeah, it's but now they have a plan. Like you actually expected to win.
Yes.
And here you go.
And here we are. So there is a plan, and they've gone silent. Now, I believe that Trump understands, because he wants lower interest rates. And the only way to do that, because we're in a prickly spot, the only way to do that is to make our balance sheet look like we're not a banana republic. In the past, it was always the Fed's job to make the Treasury look solvent, and that was their job. But now you can't. You can't do it because you just had a slide in your slide deck about the government debt going forward, and it's just a banana republic. That's what it looks like. And on the long end of the yield curve, the bond guys they're calling them out. And the bond guys believe that Trump is not going to find any material cost cuts in the government. The bonds are telling me that we're going to have $2 trillion plus in deficits moving forward. Trump can't get interest rates down if he's going to do that. So DOGE, Musk, and Vivek, tough job, and they said yes to do it, which is crazy because I wouldn't have said yes. I was like, Vivek, I'm like, you did what? No. They have to find cuts. Now, the cuts are pretty easy to find, but $1 trillion of them, not hard to find. It's just actually getting them through are going to be challenging. And the number in my head, and actually a number of, I want to say some bright guys mistakenly came to a similar conclusion, was $800 billion in cuts to pay for the Trump renewal on tax cuts, which are about $400 billion a year for the next decade, plus about $150 billion more. And then on top of that, they have to find about $200 billion in additional cuts, which will make our deficit go from $2 trillion to 1.8. So while that stinks, it's in the right direction. And the bond vigilantes might say, hey, it's going in the right direction. Now, historically, this president, as a business person and a president, has not been good about debt or cared about debt. But the problem is the interest rates are staring you in the face. And I will say about Donald Trump, he knows what happens to debt when you can't raise it, or the market is saying, uncle. I mean, he did own a whole bunch of, or he was a major participant in a bunch of casinos in Atlantic City. All of them went bust. So
he has experience.
So he knows what junk debt looks like.
Yeah.
And do you remember way back when junk debt is 6.5% yield? Yeah.
It's
the 30-year is not far off on the Treasury right now, and that's what it's looking like. And he needs to get that down.
We have a good slide from our current macro themes deck. We just did this last week. Slide 109, guys, and this this is just showing you where the tariffs is really the only way to solve for these line items. So the tax cut proposals go all the way down the line. Now, a couple that we get a lot of questions from institutional clients, in particular, have to do with restoring the full deduction of SALT, because that's like $1 trillion takeaway right there. Like, and that's so. Do you have specific views on some of these line items? I mean, just exempting tips from income tax is $118 billion. You can go down the line. I think it's quite valuable to kind of like think that through. But what about SALT? Is that?
I have no idea how they can pull that off.
Right.
So, and I suppose that's what bonds are saying.
Because you have like 39 members of the Freedom Caucus. They wouldn't go for that.
Well, it would be a heck of a lot of government cuts.
Right.
And I have a list of what is applicable and what will get done. And I'm a healthcare specialist, and so I am quite certain there will be material cuts to Medicaid. And this is going to very adversely hurt the blue states because they're bigger recipients of this. And it is a material negative for the hospitals and a touch of medical technology companies. Let's assume fewer procedures. To a degree, it may not be much, though. But that's it. Otherwise, healthcare will be fine.
See, that's the place where people don't have, like, that's not on the page, for example. Like, I mean, you have, but Emily Evans will say, look for 300 executive orders, like day one, on healthcare related items. I mean, there's a whole bunch of entropy around these announcements, I assume.
And I would urge all of your listeners that have an interest in healthcare, listen to Tom, listen to Emily. They are absolutely sensational and right on the money so frequently, it's stunning.
Well, thank you for that. I don't know if you knew this. I didn't know it until my team showed this to me. Guys, go to slide. Well, they wouldn't know what Mike said on slide 108, like Trump's love affair with tariffs, right? Like this is not new, right? Trump's love affair with debt. These are things that people might just like throw away as just Trump. But if you go back in history, go to slide 107, guys. This shows you. This is amazing. I mean, interestingly, the second industrial revolution occurred obviously between 1870 and 1914. But tariffs at that point accounted for almost half of U.S. federal receipts. I mean, and prior to that, more. Like, it's not like America wasn't built on tariffs. I mean, it's just recently that it's gone to the flat line. But, is there a historical argument that's about to be made here that makes people like me look at that and go, huh, holy shit, that's pretty, first of all, that shocked me.
But at issue, back then, the government outlays as a percent of GDP were minuscule compared to what it is now.
Yeah, so all the math's upside down.
Yeah, so tariffs, I mean, okay, let's tax it 100% from China. What's that? What's it going to be, $500 billion net? Because assume they do the same to us. Mm-hmm. So it's just a number that doesn't work. That doesn't move the needle.
Yep.
Yet the consequence to Walmart and consumers will be gigantic. Mm-hmm. So it really isn't something that is going to move the needle and what can be done.
Yeah, like in this period, like I tweeted it the other day, like because I always start my day with top of the risk management morning, and on this day in. And there was a day in the last couple of weeks where Andrew Jackson, hosted a dinner because they actually took the U.S. debt to zero.
Yes. To
Mike Taylor's Dr. Zero. Like that's a major part of the math here, right?
Best hair, though. Andrew Jackson, he had the best hair.
Well, let's go back to China. So China, people have a lot of views on what the math could be there. The art of the deal, what he's going to go for versus what he really wants. What do you think? What do you think they do with the Chinese tariffs?
I still think it's going to be a blanket tariff. That will exact the most pain for the least amount of impact to Americans.
Really?
Yeah, if you do 10%. So China can run around. If you do 100% on this, 100% on that, China can fix that. Because it's an economy that they fabricate, right? Mm-hmm. So they can come in and subsidize them, so they're okay, and we're good. But if they do 10% across the board, remember, most Chinese companies have low single-digit net margins. China can't fix every company in China, and the CCP can't do that. But a 10% hit on our end, you figure 5% price cut, they'll take the margin hit, and then a 5%, 6% increase in price to us at Amazon.com, mm-hmm. might not even notice it. Mm-hmm. So the hit to the consumer would actually be very modest. And so when I saw that balloon being floated on a 10% tariff, I was like, that is maximum pain to China and minimum to us. That's got Scott Bessent's fingers all over it.
Yeah.
Because that's exactly what I would do that.
Now, Scott, good thing you brought him up. I mean, he does rates of change. He used to be a Hedgeye client, big time hedge fund manager.
Believe me, he still is.
Yeah, he's, but he'll know. Like, he knows what the quads are. If we show slide 36 and we say, did you know that China GDP growth is going to go below? First of all, the made-up number is going to go below 4 for the first time, essentially ever. Mm-hmm. 4% real GDP. I mean, they have no pricing. They have no inflation. So when you slap 10 on a former Chinese economy that wouldn't be below 6, and now you cut it in half, the growth rate. You have, like, China is in its we are in our most vulnerable spot from a debt and deficit perspective. They are in their most, easily their most vulnerable spot from a secular growth, demand, consumption, demographic perspective.
Demographic. That is the most devastating piece. Mm-hmm. And that the vast majority of savings in China is in real estate. There's at least 100 million vacant units where everyone's savings is in, and it's all crumbling. These are units that will never be, these are apartment housing units, and they will never be used. Look, command economies end up doing things that make absolutely no sense, and they tend to blow up in a debt inflation bomb in the end. And that's exactly where China is right now. But you have to couple on top of that a demographic graph that is astonishingly horrible, meaning that 30 years from now, and it might be a bit less, the working population will be 50% smaller. What?
What could possibly go wrong?
How do you grow?
Yeah.
South Korea, same. All of Southern Europe, same. Japan, same. I mean, and then just trying to figure out what it actually looks like, though, because you're going to have some older people that continue to live, continue to consume, but can't produce and can't contribute, but they're still consuming. So you're going to have fewer workers producing products to keep these people alive, but you need to fund that. So it becomes very, very, very challenging. So you'll have pieces of inflation because there'll be fewer workers, but the demand is there. But then where do these people get the money for that demand? And you're seeing a lot of that problem in their balance sheets. France being an example of an economic basket case that nobody knows is an economic basket case. The UK. But many of these countries will be in the same boat over the next 30 years. I tell my son Max, he's 17 years old, and I'm always trying to think about what your life is going to be, what will be the issues. For us, it was, hey, look at this neat device. It has so much power, and it's really changed the world. That's our life. It's technology and that sort of innovation. His is going to be about crashing birth rates, financial duress, economic messes because the population is cratering. That's going to really define his financial life and how he thinks about it and how to trade with it and what to do.
And Max, which we may or may not have Max on a little later on, but that's in a country that has good demographics, until millennials run their course, but after that, not so much. But the rest of the world, like when I look at the rates of change of these currency collapses, there are 160 currencies in the world. Most of these currencies all have the same Western Ivy League monetary policy. Oh, we slow, we cut rates, we stimulate. And the clock's up on a lot of these countries. South Korea, France, Canada, he just got finally resigned, thank God.
Also on the list.
Yeah, I mean, these things, like never in I said this the other day, in 25 years of doing this, I've never seen a more destabilized global fiat currency system, right?
Yes.
So that, including the Chinese yuan, they had to stop bond buying last week. I mean, these guys are like, oh shit, this isn't going the way that it was supposed to go. Do you think the dude at Yan Yap or whatever in South Korea and Squid Game Part 2, what's happening in South Korea is Squid Game Part 2. People don't have any money.
We're out of Schlitz. So, yes.
That's different. Like, when you look outward and you see that, and you see Europe, like, if I'm an American boy, 17 years old, like Max or my son Jack, we're the same age, God bless him, and good luck.
Yeah.
Right? Good luck, Jack. Good luck, Max. But you see an opportunity here where America is going to be in a much stronger place from both a currency perspective, and an economic perspective than a lot of very large places in the world.
Demographically, we are less bad. And strategically, we have the capacity to add willing participants to come here. And that is a unique feature.
Legally.
Yes, legally. Legally would be it. But we can integrate all types who want to come here, work, and do well, because we have a common language, and we're not xenophobes, contrary to what many say. We are greatly accepting of minorities, and that we are a country of minorities altogether. So we have a lot of potential, but that doesn't stop our balance sheet problem that we have underway right now. And so what I would expect to see is the DOGE balloons to start to come out. And I expect to see about 800 billion of them. And if they are going to renew certain of these tax cuts and add some others and cut government, it's going to feel like a 2.5% drag on GDP. And the hope, and it's a legit hope, is that because of the Chevron doctrine changes, taking out the red tape of expanding business in the U.S. is really going to take off in about 2 years, because it'll take a while to get through the courts, fight something, and then changes the whole thing. We can drill here, we can build here. Nonsense that is layered onto our regulation for 30, 40 years are now going to be erased away. And so we could see a big growth step towards the end of this administration. But I think there's a decent chance, if the spending is going to go, if the budget is going to go the way I think it'll go, or it could go, we're going to see about a 2.5% drag on GDP starting in 2Q.
Like now. And that's, I mean, this is essentially the core. There are 170 slides in this slide deck, and I can't even recall all the numbers right now, but in terms of slide numbers that would show this. But it's a two-part movie. I mean, you got Milei in Argentina actually telegraphed it very well. He's like, expect pain initially for a longer term gain. Now he's starting, now his GDP is going to go from negative to, we think, plus 5%. But he had negative real GDP, and he really changed it, right? He routinely, as a stand-up comedy act, every day mocks the bureaucrats, big government spending, took it all out, took everybody out. Like, Trump, that's not his style. To start on January 20th with expect pain, you're just saying it's just going to be pain and he's not going to call it that.
I would think it wouldn't happen had he not recruited the right people in place to do just that. So now that we have
just make them
Musk in there, well, the point is he has an expert. That's all. And a plan, because I want to do this, this, and this, and I want lower rates. How do you do that? The only way to do it.
Slow the economy.
Yes.
Well, and it's also...
And that would be slow government.
Okay, so now let's do the other part of the movie. Guys, show slide 59. We'll do slide 59, 60, 61. Those slides I remember because I was using them on the macro show today. So this is small business in America, right? So on the right side, and that last one today, see how that chart, go back to slide 61? It went to the highest level, maybe not ironically, since 1983, right? When Reagan came in, they had to take the pain first, right? And then they eventually saw the recovery. Just the order of magnitude. So this is the other part of the movie, which is, and by the way, on that chart, the only other time that small business confidence did that was when Trump got elected the first time. But confidence stayed high. And there weren't, he actually had pro-cyclical tax cuts. He didn't have deficit cuts. So that's the question. You get small businesses are 99+% of businesses in America. They're businesses like mine, 500 people or less. They represent almost 50% of the hiring. They're super confident. Super bullish. Right? Like, you're going to cut my red tape.
You remember the hedge fund days, right?
Yeah.
This is the anticipation trade.
Right.
January 21st, that's the actual execution.
Yeah.
Right?
So you're saying
execution hurts more than anticipation.
I get it all right now, but the whole thing, fully loaded with get off my lawn, DEI is the other big line. Like, there are a whole bunch of things that piss people off. And you're saying that you're just not going to get that. It's going to take a while. 2 years?
Oh yeah. It depends what they end up doing on DOGE, and frankly, if they don't do much on it, oh God, I don't even know what bond yields are going to do. I'm very, very worried. The worst thing that could happen for the U.S. is that we come to a position where we're in a panic because we can't get debt done. Mm-hmm. Right.
It's not just us. I mean, Japanese 10-year yield just hit a 12-year high. You look at the German 10-year yield, the UK 10-year gilt yield hit the highest level going back over a decade. I mean, it's a worldwide thing too.
Yes. So if they don't execute on DOGE, in my view, the bond market is going to make them execute, maybe this year. And that would be far more painful than anything else. Far more painful.
I mean, it's not out of nowhere that the S&P 500's trend, my trend signal, which is my most critical signal, broke 2 days ago. Broke on Friday. And that you're seeing Apple, Microsoft, these are not like, tiddlywinks. I mean, when you take actually those three companies, it's north of 20% of the S&P, Apple, Microsoft, and NVIDIA. I mean, so the whole thing is inextricably linked. And how do you think that part works? Let's just say you're right. The economy slows faster than anybody thinks, and Trump actually needs it so that rates start to come down. What about this? I mean, the concentration factor in the stock market.
Oh my God.
And the demographic reality of it, like on who owns it.
So what I look for, because we've been doing this a while, what I look for is the blow off top. And there's always one stock that's like the stupidest, biggest, dumbest blow off top. And I really have great respect for this gentleman, but Tesla was the blow off top in December. That stock went to 1.5 trillion market cap for an automaker. It doubled between November and December. And I'm talking to my tech guys, because I talk to everyone, tech guy, everything. And I'm like, why is this up? And they're like, well, robots and robotaxi. I was like, they have a demo robot. They don't have a robotaxi. They what? It's like $1 trillion of market cap. It goes all there, and you say, well, who owns it? Everybody owns it. Every single account owns Tesla.
Yep.
And but what else is happening? The EV tax credits are going away, and that will happen in the very short term. Well, the street numbers for Tesla are looking for 16% year-on-year growth on revenue. So car sales up. This company's trading at 12 times forward revenue for an automaker.
That just missed numbers.
That just pooched it in the last quarter of free money from EVs. Now, I can get specific. Most of these cars are leased, Tesla cars, and I don't mean to pick on Tesla because I think the man behind it is an absolute genius. I mean, just one of the most remarkable people, dare I say it, since Einstein in the past 100 years. I know people will come down on me about that, but he makes rockets land on a lily pad. So, I mean, okay, he's smart. Those cars on lease without this EV tax credit are going to go up by $150 a month. And the estimates are for plus 16 year-on-year sales. I think there's a high probability it's negative. So you have a $1.5 trillion market cap company that's going to have negative revenue growth. Mm-hmm. What happened off of the biggest blow off top I've ever seen, and I can tell you for sure, because I talk to a lot of the pod guys, and the pod guys are the big money managers that run money at like Millennium and Citadel. There are so many tech PMs that lost their job in November and December because of Tesla. Mm-hmm. That was them covering all the way up because can't take it, you're fired. And last time we saw that was like the old Volkswagen Porsche thing. Remember when Volkswagen went to the moon on that craziness? This was a similar thing, and that's what I look for on. Well, where's the insane blow off top in a mega cap name that nobody can? Oh, there it is. Yep. It happened.
It might have. I mean, you might have had a double blow off top because you also had Nvidia on the eve post his CES. Jensen's CES. I said the first thing I asked Felix, I said, I didn't give a shit what he said because I know what he was going to say. We're talking about some of the world's. You go back to Einstein, Elon and Jensen, from a pump and dump perspective, are far more impressive than Einstein. Einstein, I mean, just look at the dude. I mean, he wasn't like these guys. So I said to Felix, I said, what was he wearing?
Well.
But it wasn't just the black leather jacket.
I know it is. I know, right? It wasn't just. It was. Yeah.
He dialed it up with diamonds.
Wasn't it crocodile too? I think it was
the
crocodile.
The whole thing was like, and the thing went to 149.
Yeah.
And it took forever for it to go back and make. Like I look for that's what I look for. You know this, but I mean, blow off tops are defined by higher all-time highs that do outside reversals and then fail, and then start making lower highs.
Yes.
So you have that pinned up high. That's why I always look at where is the prior high. It zapped that prior high by a buck or two and turn-tailed like a boss. And that was a big reason why Friday, as you got to Friday, it ended up being like a shit show. But those two things combined, I mean, we're talking about like a massive component of the S&P 500, but just massive pump and dump.
Yes. And this is at a time where the passive flows are sort of at maximum because we still have sort of maximum employment. So this is the active managers and maybe the pension fund guys and so forth that are turning the page and saying, oh, well, maybe this isn't going to work.
Well, those charts that I showed on small business did perpetuate upside in that jobs number and have perpetuated upside in JOLTS numbers. The problem is, like we talked about, the two parts to it. Like, you may anticipate that this is all rainbows and puppy dogs, especially, and by the way, the NFIB survey does skew largely Republican. But you may believe that, and if you do believe that, you're like me, you're probably hiring incrementally if you have a growth business. I'm not doing it because of some Republican dream, but you're taking up your cost structure into what you're saying is going to be a slowing environment. Because the labor numbers have been good. They're not recessionary. They just accelerate.
Yes.
But it's an expectation.
It is. It is. Just like the Trump tax cuts getting renewed are all in the numbers.
Right.
They better get renewed.
Yeah.
All the corporate numbers, we haven't changed those tax numbers, so these sort of things won't actually change the number, but they have to get done.
So back on this blow-off top with Elon.
Yeah.
Because it's easier to identify. I mean, we've analyzed and identified behavioral traits in Jensen that is clearly, let's not use the word manipulation. Let's just say try to induce your behavior to buy the stock whenever it's not doing so well. Get on CNBC and say demand is insane. In a quarter where the rate of change of revenue growth is slowing, right? It was
law of big numbers. What are you going to do?
But the rate of change slowdown marries up very nicely. You go back to blow-off tops in Cisco, many years ago. The rate of change of revenue growth starts to slow. The pumping gets a little bit more aggressive. We're there for Jensen. There's no street model. Even the most raging bull on NVIDIA wouldn't, most people would acknowledge how bad Tesla's business is. NVIDIA has raging bulls who the highest estimates on the street are decelerating revenue growth numbers.
That's right. Meaningfully.
So you got a raging POS in a car business, and you got a slowing bubble. I mean, I'm just trying to, why is my signal going bearish on these things? I mean, to me, that's a big part of it.
This is why I said coming into this year, I'm actually very, 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 very bearish.
And nobody was.
Totally different. Yeah. And by the way, that was like 2 weeks ago.
Yeah.
So, and this is different than when we talked about this for 22, when I was incredibly bearish. Coming right off of COVID with those crazy margins.
Yeah.
I went through all the companies and I was like, oh my God, who can possibly keep these margins up? This is a margin story of street just goal seeking their price targets, and you saw what happened. The market was a disaster, especially for high growth with margins that are unsustainable.
And that, to be clear, sorry to interrupt, but when I say nobody was bearish at the beginning of this year, that doesn't include the guys who were bearish all of last year and got their faces ripped off. Right? They're always bearish. But coming out of 2021, when you and I were both bullish, then we went bearish in 2022, that's how you do the job, right? Like this, you're saying, like, it's not the same as that. I mean, we hit rolling recessions in different parts of the economy. This one, you're going with the government, cuts.
Yeah, and that's the crux. That is the hook. That's the fulcrum. It is all about DOGE.
Yep.
Vivek and Musk have the most important job since Andrew Jackson, and that they have to fix the banana republic and get it through Congress. Very, very difficult to do, both. Because but first what I would want to see is the balloons that start, the ideas, and see what sticks.
Yep.
There'll be many of them. There should be many of them. And that's what I'll be looking for, because then it's serious.
Well, that's, Vivek, who's younger than me by a decade, like, he's a young man.
But smarter than both of us by 2.
Yes. But if I'm Vivek and I'm J.D. Vance, and let's just call them the young Republicans, who I'd say just accepted that this was going to be the deal with Trump. I mean, now it's all hunky-dory, allegedly. But if I'm them, I'm trying to get elected the next time. I want to take my time, right? I want to show the country for 2-4 years at a time that I'm serious about this. and I'm not going to back off. No matter what it does to the economy in the short term, this is for our kids. That's how I would do it. I mean, so that, from their perspective, I guess, I'm trying to connect the dots that you've already connected, because you do this better than anybody, which is, again, why would they go slow early? Well, it's because they have to, and it's also maybe because they can.
We have 30 days. So those balloons have to come out.
The initial ones.
Yeah, and they have to come out. Or it's not going to go, DOGE is not going to go the right way, and the government may be forced to act as bond yields explode. And that would be unbelievably painful. And 4 years ago, when I first came on here, and we were talking about COVID, and we were talking about all that spending that was ongoing and would accelerate from there, I would tell Mr. Max and yourself, my greatest fear is that they can't stop spending.
Right.
And that's exactly what happened, and here we are, and now we're losing control of the long end of the yield curve, and this is exactly what I feared 4 years ago would happen. Here we are. And if it doesn't get rectified, well, it will be forcibly rectified. And this is what happened in the 1970s, forcible rectification.
Well, this is, and it's happening with company. The ghost of COVID is your Moderna short, MRNA.
Yes.
Which you and Emily share that view. But I mean, these things are all, they're born out of man-made issues, right? Like, it's not like
it's very simple, right? I want a free lunch and I want it now.
Yeah.
That's it. They're buying votes, and they've been buying votes. This is what this previous administration did in the biggest way on record, during full employment, a strong economy, and 6 to 7% added GDP on top of that with government spending in order to change policy, change the world, do it in the way that they want. But they're spending our kids' money and our money. And the public doesn't quite understand it. But when they go for a mortgage right now and it's 7.5%, 7.8%, and they can't float that, now they know it. So, and then you take a step back and you say, we have a stock market that's just off of all-time highs at mega premium valuations, a government that's spending off the hook, auto sales that are in the toilet, existing home sales that are in the toilet, an IPO market that's almost non-existent.
It's crazy.
Why are stocks here? Why is this asset class to the moon? It is because of passive flows, thank you very much, Mike Green, and massive government spending. If you take that government spending and go, dink, that'll be it. We're going to have a huge move in assets, in my view. And that's what I fear, and that's why I said, I'm not necessarily bearish, okay? Because if DOGE doesn't come through and they just keep on going, believe it or not, stocks are going to work for a while until bonds destroy everything, all right? So there will be a trade in there. But I would urge everybody, for me, and this is not a Hedgeye view, this is just my view on it, keep your ear out for DOGE. If the cuts are meaningfully material, being balloons coming out, and you think this can get through or will get through, it is going to have a profound impact on the economy in a very short period of time. That's my belief. And it will be very painful and far better in the end, because now we actually do get that credit cycle reset and a legit growth phase coming out. We get things on the right trajectory. The US dollar is sustainable, as you know, right now. It is, even though the dollar is at kind of apical levels, it's not a sustainable sort of thing. But our currency value could be if they get the debt on track.
Which would be
to a degree.
Yeah, I mean, to a degree. I mean, it was the dollar stability characterized the 1980s and 1990s bull markets, and GDP was north of 4.5% on average, real, annually. And that's how you get out of the deficit problem. Besant said this, as anybody who can do math would, which is, well, we grow out of it.
Yes.
Eventually, but you have to cut into it first.
I believe that's the case.
It's a very, very well articulated view, as I'm not surprised. Before we get to a guest quickly to finish up, a name that, one of the reasons why Mike outperforms is that he gets out, right? So he wasn't long Lilly or Novo, and pretty much every active healthcare manager, I don't know if they still are, but
size.
if they still are. I mean, these are, there are so many bubbles, right? I call them Moab, hashtag mother of all bubbles. But I mean, that one, I mean, what healthcare manager wasn't long Lilly and Novo? And now for me, on my signal strength, they've been two of the better shorts. Not as good as Moderna, which is a tough compare, but they've been pretty good shorts.
Don't worry, you haven't missed it. So
you haven't missed Novo, you don't think?
Or Moderna. Novo can't make numbers, in my view. So they're losing share. Lilly has a superior drug, and that's it. And then on top of that, this entire class goes generic in 2032. And that's the painful aspect of drugs. They go generic. And you're going to have the biggest class ever go generic in 6 years.
Ooh.
Or at least it'll be right on table to go away in 6 years. And so even if this market is 5x the size that it, or 6 or 7, you still never get your money back with Lilly at 35 times forward. And I own Lilly. Because I think there's certain things that are going to happen in the near term that'll keep it there. But it's also, 13% of the benchmark? Mm-hmm. It's gigantic, so they have to own it.
Well, they have another drug pipeline that's coming, I assume is part of your catalyst, or no?
They do. Yeah. They do, but so far as like pipeline items to replace this GLP-1 class, you're not going to be, this drug is really good. I mean, sensationally good. I'm 30 pounds lighter because of this drug. Thank you very much. Sensational drug, very well tolerated. It's going to change, it's literally going to change medicine because people are going to be thinner. Mm-hmm. And a lot of my book, the Pink book, is around these changes. I have a lot of long-term bets in there that are around these changes.
Do you think Vivek is going to perpetuate some of the bets either way? I mean, Moderna, I mean, I would assume could be a zero actually at this point. He wouldn't share Moderna's view of the future of vaccines.
Moderna has about 7 quarters of cash left. And boy, do they know how to burn. But this is the second time they've restructured in 6 months. So just give you an idea, they are. And remember, they built out this entire infrastructure for Moderna. We're the top of the world, we're the best, build, and within 24 months, just whack, whack, whack. And that's gonna be, it's very painful. But they're stable of, Moderna does have a shot at a drug in 2 years. And it's a cancer vaccine that may work for melanoma. And that may end up becoming the standard of care. But this is years away for an outcome study. And in the meantime, they have an unbelievable problem with their business, is that they have crashing revenues and an incredible burn base. Now, they have a lot of cash, but it is going to be running out within those 2 years. And so I think Moderna has material problems on the horizon.
On that cheery note, let's
good news.
Talk one of Mike Taylor's most positive predictions here. Okay, and if you don't mind me writing it down about this guy named Max Taylor who's going to come in here. Max Taylor wins an Indie Development Series championship. All right, and there he is.
Mr. Max, nice to see you.
Welcome to Hedgeye TV.
Thank you.
Yeah,
thank you for having me.
This guy's got a good handshake.
Yeah?
Really good. Really
We've
good.
been working on it.
A lot of practice, yeah.
So I know a lot of people in our community have seen your dad's tweets. Now you have your Twitter account. It's so awesome to watch you like grow up and crush it. You guys are heading to Florida, I believe, right after this. Can we even talk about that, or is it too top secret?
You should hold this as a proud Hedgeye sponsor.
Can you guys talk about that? I mean, the whole idea of starting to drive these faster cars and
yeah. I mean, I'm driving cars now that are going 200 miles an hour. It's a totally different ball game, but it's just so much fun. I just love it so much.
In hockey, I know that this may not make any sense to you at all, so please say it doesn't.
Okay.
But the best young players get better when the game gets faster and they play with better players. Is that the same thing with cars and racers?
Yeah, I'd say so. It's like you're being thrown in the deep end. You know, you learn from all these guys that are very experienced and very, very talented, and they rub off on you. You know, you learn what it takes to be really, really good.
Yeah.
So, yeah.
So the game, does it slow down? I mean, Ayrton Senna, I just watched the Netflix series. I don't know if did you see that?
I didn't get to see it yet.
Oh my
but it looks
God,
incredible.
this Brazilian, you fall in love with the guy.
Yeah,
right? I mean, it was his passion was a differentiator, but his ability to slow things down as it got faster or drive in the rain. Like I thought that was incredible. Is that something that does the car go faster and it slows down for you in your mind?
Yeah, I think you definitely get used to it. I think a talent that a lot of these great drivers have is to drive really fast and still have the mental capacity to think about a million different other things and how to win this race.
Yeah.
And that's a talent that he definitely had.
Yeah, they show. I'm not going to give away the whole the life story or anything, but when he crashed, it's because the guy was in his ear too much. It was distracting his thought process.
Yeah.
Like, get off my lawn, dude. Like,
He doesn't talk
you don't,
on the mic. He's like Mr. Silence. Like, is your mic live? Yes. That's it. Doesn't talk. Doesn't talk.
Laser focus.
Listens, but that's it. In fact, Max has been famous for, on the last lap, you have to tell him checkered flag, checkered flag. He'll freaking keep going. Last year, was it last year or the year before? I don't know. He's been in a car for 2 years, and I told him, I said, you have to tell him checkered flag because he won't know. He won't see the checkered flag, doesn't even know, and he'd take a victory. And I'm like, Max Taylor taking a victory lap. And by the way, that's a penalty. He got a penalty. He nearly got disqualified from his last race for missing the checkered flags, and they'd penalize him. So, but that's the sort of intensity, frankly, that you're born with. And it's great for me, though, because my wife comments on it all the time. Oh God, he's so intense. Everything focuses out, and then Jill will be yelling, "Mike, Mike," and I'm not answering. Like, well, it's just this intense. It's genetics, Jill. I just have the same intensity. It's not that I'm not listening.
Do you get nervous? I mean, do you and Jill, or is it different experiences for you? Like, how nervous do you get when he's going 200 miles an hour?
The technology on safety in the cars has leapfrogged in the past 6 years.
Thank God, because from the Ayrton Senna documentary, well, he was really his death was the instigation of a lot of
one of the many.
Part, yeah.
But now, at the time, those were tubular steel frames, just literally paper mache into concrete.
Yeah.
And now it is 3-inch thick carbon fiber. Unbelievable. Structure, rigidity, safety, and a titanium halo over your head.
Well, that's a big
and that is massive. In fact, I wouldn't have him. I would not do it if that safety precaution was there. And I've seen a number of things, car flips, things like that, debris, a wing flying at you, that hits you in the helmet, that'll kill you. But now you have this titanium halo, and it's just bing.
What's the worst accident you've had, Mac?
I've been fortunate enough I had a pretty big crash on the first day that I drove the car, actually. It was the second session, and I completely binned it, put it in the wall. But yeah, I've seen a lot of scary stuff, though, for sure.
And this is where having your dad comes in nicely, because correct me if I'm wrong, but isn't he paying for part of the cars?
The whole thing.
The whole car. So that's that.
Yeah.
Now that I would maybe have a reaction to that. Did you have a reaction to
that first big crash, which was his first day? I was right next to the team owner, and this is when he decided to want Max on his team. Max crashes into the wall, and I'm like, "Well, I'm glad we got through with that," And he's like, "You're the guy for me," because usually race dads they go absolutely. Yeah. It was about $35,000 in crash damage.
Wow.
And actually, he kind of held that for a while, but he split the car in two twice last year. It wasn't you, actually.
Yeah.
It was other guys that got in there. And
sometimes it just happens. Wrong place, wrong time.
And when the car gets split in two, that's a lot of money.
Yeah, that's
a lot
Look
of
at
money.
this picture of Max. Look at
and
thank you. Look at that Hedgeye.
There we go. Yeah.
The black on the car.
Yeah.
Well, I mean, just to wrap up on this, on this development championship series, can you just, Max, walk through like how does that look? Because it's super, unlike hockey where the pool's still pretty wide, it gets really narrow. And how does that go? IndyCar next, is it?
Indy next, yeah. So the level below IndyCar is Indy next, and in IndyCar there's only 25, 30 drivers, and not all of them are even getting paid money. So like you said, it's incredibly intense and incredibly competitive to make it. It's hard.
Yeah.
Tell us about your pro season coming up.
Yeah,
tell
big
everyone
season.
what pro is.
Yeah.
And then tell about what next is, and that you're. I guess we're announcing it now on television. We haven't announced yet, but you can make your announcement.
Yeah, exactly. Yeah. So I'm racing in USF Pro, which is a step up from what I did last year, and as well we're doing a partial season in Indy Next, which is the level right below IndyCar. It's going to be live streamed on live TV. It's going to be on Fox Sports. So it's a lot of really exciting stuff, and yeah, I'm just really excited. Yeah.
I hear that there's some money involved.
Yeah, that is true. Yeah, which my dad is very happy to hear about. Yeah, if I win the pro championship, it's a $700,000 scholarship to move up.
Wow.
Yeah, so it's huge.
That doggle hunt, huh? That's a little better. Yeah, because after all this, and congrats on all your success.
Thank you.
What I'm reminded of is, well, Mike Taylor is very and properly critical of the government's deficit. He has been running quite the deficit with Max Taylor's racing career.
Yeah.
And the only way to cut into that deficit is through revenues and wins.
Yeah, I just got to keep on winning.
And this is how I looked at it when I added up the money to do this. And the biggest, he got into a go-kart. This is 4 years ago. Sits in a go-kart. Hey, this is pretty cool. Within 1 year, he's battling for the national championship. He finishes third. He finishes third in the world on a global championship at the Super Nationals. There's never been a person who has shown up in their first year and ever done that we know of. So let's say the past 15 years. And so it made a mark. Gene Haas told me, this is Haas F1 racing, he heard about this and he said, your son has to go into cars right now. And he did. 1 year later, he's winning the junior US Formula Championship, so he's the reigning world champion for that now. And so we've had this very short period of time. My goodness, he has a gift, and it costs, and I framed it this way, this is like the worst thing that could possibly happen. It costs an enormous amount of money to find out that you're not good enough to make it.
Oh,
and so I just laugh at myself all the time. This is the dumbest sport I've ever seen in my life. It is also the greatest sport because it's like running a hedge fund. You have an incredible amount of money on the table. You have all these bets on. So many things can go wrong. But what if things go right? and it's so it is. It's gut wrenching. It's painful. There's blood, sweat, and gears. There's a touch of cheating. We don't call it cheating. We call it optimizing.
Yeah.
And I'm not. And people on the track, they get nailed for it now and again. You know, for doing it. And this is exactly with Senna in F1. His car was all dialed up, especially back then. But it is gut, especially for a parent on the side watching this. I cannot talk to my wife while he's racing.
Yeah.
She is in her own zone, not to be talked to.
Yeah, you're like in hockey, a goalie mom or a goalie dad in that case.
That's right.
Just stop, you know. But congrats, man.
Thank you so much.
And best of luck. Like,
yes.
Going straight to Florida and driving some super fast car.
Yeah.
So don't crash it right away.
I'll try.
And thanks, Mike, for our conversation.
Hedgeye will be on Fox Sports.
Well, I tell you.
There it is.
The world is changing, all right? Thanks for joining us. That's Mike Taylor and his awesome son, Max T, as I like to call him. You can follow him on Twitter. And we'll see you next time.